Hi, and good morning, everybody, and welcome to this webinar. Today, we're going to talk about the US elections and the prospects and implications. I'm your host, Adrian Pask. I'm the Chief Investment Officer at PSG Wealth and also the Managing Executive of our multi-manager business. In today's webinar, we'll look at the implications of the US elections on fiscal policy, monetary policy, and trade policy. Of course, we shouldn't overlook regulations. There's always a lot of debate around healthcare, in particular at election time. And then obviously energy regulations also very important. The election outcome will impact the US, of course, but also the US trade partners and China in particular. We've seen a lot of tension over the preceding 4 years in terms of US-China trade. And all these things ultimately also drive the global appetite for risk and risk sentiment, which in turn impacts emerging markets, including South Africa. So definitely we need an expert opinion for this debate, and who better to ask for some help here? Larry Hathaway. Larry has almost 3 decades of experience in markets. He holds a PhD in economics from the University of Texas and a master's in international studies from Johns Hopkins University. He worked for GAM as group chief economist and group head of investment solutions, and also for UBS for more than 20 years in various roles, but served as the chief economist for more than 10 of those years. Larry is widely recognized for his appearances and articles on Bloomberg, radio, TV, CNBC, BBC, CNN, Financial Times, and it continues. So we're looking forward to those insights. In terms of the program, we'll allow Larry opportunity to give us some of his opinions, work through some slides for 30 minutes or so. And then after that, we'll conclude the latter half of the session with a Q&A session. So Larry, thank you very much for joining us this morning. We're looking forward to the session today.
Hello, my name is Larry Hathaway. I want to thank Adrian for that wonderful introduction and all of his colleagues at PSG Wealth for permitting me to speak with you today about a very important topic, namely the upcoming US elections, their impacts on the world economy, on capital markets, and on many, many other things. Over the next 25 minutes or so, I'll share with you some perspectives on the elections, on what the polls are currently saying, what prediction markets are also telling us about the possible outcomes. I'll provide some background to US elections in terms of their institutional makeup, some of the history behind those elections as well, and really try to draw a contrast to what are most unusual and extraordinary times today. After I conclude those sets of prepared remarks, then Adrian and I will engage in a question and answer session, as he just mentioned, and hopefully we can dive into both some of the details behind the polls themselves and the elections, but also, much more importantly, on what they mean for all of us as citizens of the world, as participants in democracy, but also as market participants and the implications for our portfolios. So without further ado, let me begin. The 2020 elections are extraordinary and unusual. We have really not seen something like this in US economic history in probably a century and a half. And we have to go back even to the foundations of the US political system in terms of elections that immediately followed the founding of the country, to see even some parallels in some circumstances to what we're going through now. This is truly an historic moment. What I'd like to do first is try to set the stage. I want to provide a little bit of background to the makeup, to what is at stake in the upcoming elections. I'm going to go through some of what the public opinion polls, prediction markets are telling us, so that we can assess already at this stage, just under 1 month away from the November 3rd polls, what the outcomes look like, how things might change. And then in my concluding remarks, I'll talk about what this implies for public policy, the areas that Adrian had just mentioned, monetary and fiscal, as well as regulatory policy, and also for some of the longer term challenges that confront both the United States and the world economy, and how that then translates, at least broadly, into outcomes in capital markets. So without further ado, what is at stake? Well, first of all, the elections, as you well know, take place on the 3rd of November. That already isn't quite right. Many states allow early voting. It is estimated that some 6.5 million ballots have already been cast either in person or by mail across those states that do permit early voting. But for most voters, they will actually go to the polls in person on the 3rd of November, the first Tuesday of November, as is traditionally the case in the United States. We would anticipate the voter turnout is going to be higher than usual, given the very contentious and widely followed campaigns that have been a big part of the backdrop for this calendar year, as well as, of course, the extraordinary circumstances surrounding the pandemic, the economic implications of it, which are clearly raising awareness of what is at stake for both parties, for both presidential nominees, and for the country as a whole. In terms of what's up for grabs, well, first and foremost, the White House itself. Every 4 years, of course, Americans vote for their candidate to serve as president of the United States. There are also 35 Senate seats out of a total of 100 that will be contested on the 3rd of November, of which 23 are held currently by Republicans, and only 12, roughly half that number, are held by Democrats. That already gives you some slight advantage in terms of the Democrats potentially picking up seats and maybe even wresting control of the Senate, insofar as in this environment where the epidemic has left such a scar, both in terms of the mental scars on the society, but also the economic scars, that gives a chance for Democrats to perhaps pick up some of those seats that may be more closely contested. Currently, just by way of reminder, Republicans have a majority in the Senate of some 4 votes, effectively. 53 to 47 is the actual count. Remember that if there is ever a vote that is split 50-50, then the vice president, as the president of the Senate, casts the tie-breaking vote. So Republicans actually have effectively a 4-seat majority at the moment, although, again, that could change depending on who wins the White House and who the new vice president may be after the 3rd of November, actually, after the government is seated in January. Thirdly, all 435 seats in the House of Representatives, as is always the case every 2 years, are up for election. And currently, Democrats hold a fairly sizable majority there of 232 to 198. In addition, beyond the federal level, there are 9 governorships that are up for election. There are various state and local elections, including for state legislatures and municipalities and mayoralities and so forth. And then finally, as ever, there are various initiatives on the ballot as well. I won't talk today about those things. I think our focus will be on the White House, the Senate, and to a lesser extent on the House of Representatives. Now, in order to understand the presidential election, we have to consider that Americans don't vote directly for their president. They vote for electors, those electors coming from each of the states. So we have to talk a little bit about the form in which they then gather in December to actually elect the next president of the United States, that form being known as the Electoral College. There are 538 electors. That is 1 for every senator, so that's 100, 1 for every representative in the House of Representatives, that's 435, and then just for out of perhaps more curiosity than anything else, there are additional 3 electors that represent the District of Columbia, which is otherwise not represented in either the Senate or in the House, given that it is not formally a state. The popular vote, by and large, in each state determines the electors. There are 2 states where there are exceptions, Maine and Nebraska. We won't concern ourselves too much there, although there are scenarios you could imagine where the Electoral College could hang in the balance based on what some districts in either Maine or Nebraska do with those Electoral College votes. But it's also important to note that electors can deviate from the vote of their state. Now, the Supreme Court ruled earlier this summer that those so-called, let's say, free electors can in fact be withdrawn by those states, but it's a very messy, complicated legal process. So for simplicity, we'll say that the popular vote in each state will determine the electors. But again, that could be an area that would be one of those areas that could be result in a contested election, to which I'll come to in just a moment. In order to become president, the winning candidate has to secure a majority of at least 270 electors. In the last election, that is in 2016, Donald Trump won relatively comfortably with over 300 Electoral College votes, just to give an example from recent histories. There have been, of course, disputed elections. The most recent one was in 2000 in the campaign between candidate George W. Bush and then Vice President Al Gore, which went down to the wire in the state of Florida to determine who would get that 270 majority in the Electoral College. And it was decided ultimately on a 5-4 vote along partisan lines by the Supreme Court. But Gore did concede that election, which obviously prevented any kind of social or political unrest that could have followed. Back in 1800, there was actually a vote that was settled in Congress, and that was between Thomas Jefferson and Adams. And that might be an interesting one just to make an observation about. If for some reason there is no majority or even a dispute in the Electoral College, it is in the Constitution ordained that the US Congress will then decide who the president is, with the House of Representatives making that decision, and the Senate would then decide who the sitting vice president should be. Note that while the Democrats have a majority in Congress, we showed that before, that vote in Congress is not done on the basis of the total number of Congress people voting individually, but on the basis of each state having one vote. In other words, a large populous state like California would have the same number of votes, namely one, as a sparsely populated state like Wyoming. And on that basis, the Republicans actually have a majority since they control more states, even if they have fewer actual representatives. So if it's contested and goes to Congress, which is not to be excluded in today's extraordinary circumstances, and there was a vote along party lines, it's more likely that Donald Trump would secure a second term, even though, again, Democrats controlled the absolute majority in the House of Representatives. But equally peculiar is that the Senate would then get to choose in January who the vice president is. It is quite possible that Democrats might secure a majority. So you actually could have, and this would be a really very, very strange outcome, a President Trump and a Vice President Harris, which would make for a very interesting 4 years after that. But let's hope that those chances are remote, and for reasons I'll come on to, they probably are. So what do the public opinion polls and the prediction markets now say about the likely outcomes in these important races? Well, first of all, looking at polls of polls. So a number of polls are taken every day. A few of them come out. If you take a sample of all those polls, you look at what they're telling us, and then you run them through a statistical analysis. And this is done by the website 538, which is run by Nate Silver, a fairly well-known, regarded pollster and statistician around political outcomes. They're currently giving Joe Biden an 80% chance of winning. Actually, having checked the numbers as recently now as October the 9th, that's up to 85% odds. There's been a big swing in the public opinion polls since the first and maybe the last, we'll have to see, very peculiar, even disastrous presidential debate that took place back in the first week of October, in which most people believe that the president performed very, very poorly, and that's certainly what polls would suggest. Of course, public opinion polls can be wrong. We've seen that not only in the United States in 2016, where most of them predicted a victory by Hillary Clinton, as well as in other circumstances elsewhere, the Brexit polls we probably remember, and many others that have proven to be erroneous. But odds like these are pretty unusual. We don't typically see such a sort of stacked set of odds. And the most recent individual polls, those conducted by the Wall Street Journal and NBC News or by CNN, show that Joe Biden's lead has actually extended over the course of recent weeks as we head here into the middle of October. And indeed, Biden's lead has been also very, very stable. We can see that in terms of the popular vote or in terms of, let's call it the predicted Electoral College. In other words, looking at polls within states, which is actually a better way of looking at things given the importance of the Electoral College than just looking at nationwide public opinion polls. And while I don't depict it here, this is in marked contrast to the 2016 election, where both the lead that Hillary Clinton enjoyed in the popular vote was smaller than we see here. And note, again, it has expanded somewhat in recent days, but it was also a little bit less steady. There were some back and forth. There was clear signs that voters had not made up their minds quite to the extent that appears to be the case today, which is one reason why statisticians looking at the polls like the ones we just showed tend to conclude that the odds are actually quite heavily stacked in favor of a Biden victory in the Electoral College, and therefore some risk that we will, or some decline in the risk that we would actually even see a disputed outcome. The prediction markets, which are based on the ability of individuals to actually wager, that is to put bets down on the outcome, tell a similar story. The blue bars here represent the total amounts of the wagers. Those are beginning to pick up as we get closer to the actual polling date. And then the respective lines here show the likelihood of each candidate winning. And what we're seeing here again is both a relatively stable sort of prediction-based expectation that Joe Biden will emerge as the successful candidate, as the winner of the 2020 elections. And again, in more recent days, the gap has begun to widen, just as we have seen in some of the public opinion polls. And again, this stands in contrast to what we were looking at 4 years ago, when these lines were not quite so definitive as we see today. One of the things that makes this election so extraordinarily unusual is the possibility that we might see election fraud. It has certainly been raised by the sitting president for the first time, at least in such a vociferous and vocal way that certainly I can remember in my adult lifetime. And actually you'd have to go back very far in US history, probably to the middle of the 19th century, to see something similar occur, for example, in the election of 1876. There are different ways in which, let's say, election fraud might play out in this election. I mean, it's possible, of course, that fraudulent ballots could be cast, although experts in the field suggest that those cases are very rare and very small. That is unlikely, if there is any election fraud, to actually determine in any given state, much less nationwide, what the outcome is going to look like. So it would have to be a very odd set of constellation to believe that there would be a genuine case of voter fraud in the 2020 elections. But fraud is related to something else, and it's clearly a tool that President Trump is using, and to some extent the Republican Party has used at many cases in the past, which is to try to sow doubt in the mind of voters in order to suppress voter turnout. And it's not just through doubt that that is done, but through other mechanisms that I'll briefly touch on in a moment. So, for example, by suggesting that mail-in ballots are more subject to fraud, President Trump and many of his supporters are trying to dissuade voters from opting to mail in their ballots, which of course is terribly important given the risks of voting in person that accompany the ongoing pandemic. There's also been, of course, some accusations, and perhaps with some substance, that the post office, which is an administrative unit under the administration, that is the Trump administration, may have taken steps earlier this year to slow down the mail. And that might make some people believe that their ballot might not arrive on time and be counted. Just this week, there were some decisions made by courts, including in one of the crucial swing states of Wisconsin, that suggests that ballots that arrive after Tuesday, November the 3rd, will not be counted. That's not true for all states. Remember, polls are run according to rules and laws that are governed by the states, not by any kind of a federal agency or commission. And therefore, that's another way of basically dissuading people to not vote by mail. But if they're afraid to vote in person because of the pandemic, then you're suppressing votes. And what we know from past history is that left-leaning or Democratic voters are more likely to vote by mail historically. By the way, voting by mail dates at least back to the US Civil War in the middle of the 19th century. So it's nothing that is new. But in suppressing vote by mail, you may be skewing the outcome in favor of Republicans who tend historically to vote in person. Voter suppression of certain minorities has been a long-standing and black stain on the US election system. It dates back to Jim Crow laws after the US Civil War, primarily at that point in time implemented, instituted, and passed by Democrats who controlled the South. But after landmark legislation in the mid-1960s that flipped the South into Republican hands politically, it's been a mainstay of what the election sort of pundits call the Southern strategy of Republicans, which is not only to clean up all the Southern states, those that fought on the Confederate side of the American Civil War and are considered to be maybe more, let's say, historically biased against Black voters, but also who have very large, sizable Black populations in order to maintain control. Suppressing the turnout is something that we have seen historically many times. And that can include, obviously, various ways of suppressing registration, ID cards, and the rest, but also restricting the number of polling places so that you get pictures like the one depicted here of very, very long lines. People are not willing to endure them for any number of reasons, including inclement weather in November. That obviously can suppress the vote, which again, statistically speaking, tends to support Republican candidates and seems to be a major tactic that this president, and again, those that are running his campaign are pursuing. So fraud can take many different forms, and it's going to be something that will be written a lot about in the run-up to the November 3rd election. It may well be a point of big contention should the election be contested, including through the courts. And of course, it could wind its way ultimately, as it did in 2000, to the US Supreme Court if necessary. So let's conclude then these remarks by asking now what's at stake, not beyond just the who's going to win and what that it means in terms of whether there'll be a Democratic or a Republican president, for example, but what this really means in terms of the things that matter to many of us as we navigate capital markets. So fiscal policy, monetary policy, regulatory policy, and maybe overall things like economic activity, inflation, and the like. So a few items here to go through. What's at stake and what the implications will be depend to a considerable extent as to whether we continue to have divided government. The party controlling the White House opposed at least in one of the two bodies that control the Congress, either the Senate or the House, or alternatively, whether out of this election there is a so-called clean sweep, where one party controls the White House, the Senate, as well as the House of Representatives. The public opinion polls that we were just looking at would suggest that the most likely of those outcomes now is, in fact, a clean sweep for the Democrats, namely that, again, Biden wins the White House. But most importantly, within that clean sweep contest, you also get the Senate flipping from Republican majority control to Democratic majority control. The polls that we looked at for the presidential election are not quite as decisive. They're suggesting that as far as resting Senate control, Democrats now seem to have, roughly speaking, 2 and 3 chances of doing so. And again, it goes back to the number of seats that Republicans are having to contest or hold, if you like, but it also has to do with what sometimes is referred to down ballot outcomes. People who are going to vote for Joe Biden are more likely to also then vote Democratic down ballot, including for their senator, their representative, and even at the state and local level. So a clean sweep now looks more probable. And a clean sweep means that you then have one party that can push through to some extent or another, its agenda. And when we think about that, and we think about what matters again for asset prices, investment decision-making, and so forth, we probably first turn to fiscal policy, because after all, fiscal policy is controlled by the Congress with obviously the consent of the White House or the president. In the event that we do see a Democratic clean sweep, then we're likely to see not only perhaps fiscal stimulus, a second round of it, which is right now at impasse and has not been agreed to in Washington. We're much more likely to see that not only perhaps already in the fourth quarter as politicians begin to sort of, as it were, interpret the results of the elections and begin to change their voting accordingly so that they can obviously try to jockey for the favor of voters who have just told them what to do. But in particular, for all of 2021, we would likely see a concerted effort out of Washington to use the levers of fiscal policy. So transfers in terms of direct payments to individuals, extended unemployment benefits, transfers from the federal government to financially strapped state and local governments, and spending on things like infrastructure to ensure that the recovery from the pandemic recession, indeed perhaps pandemic depression, gets as much support from an expansionary fiscal policy as possible. On the other hand, if we have divided government, it's not so clear that we will see that. And so one of the ways of maybe looking at how market participants are responding is, as the odds of a clean sweep for the Democrats have improved in recent weeks, that you're beginning to see some of that sentiment now prevail in the capital markets. The implications for monetary policy are less straightforward. The Federal Reserve has changed its policy, certainly it's changed its objective, to allowing an overshoot of inflation, if it can in fact achieve that, over perhaps the next couple of years, as part of a policy of ensuring that it has sort of symmetry around that 2% target and isn't going to sort of, as it were, begin to adjust to a tighter policy as soon as we reach the 2% level. That's going to be something that's going to take time, in my opinion. It'll probably take the next couple of years to really achieve that overshoot of monetary policy. So the outcome of the 2020 elections won't have much bearing, let's say, over the next 12 months on US monetary policy. However, if we get that supportive fiscal policy, if we improve the chances that we bring the unemployment rate back down below, say, 5%, closer to its full employment level, then at some point in time, that will condition how the Federal Reserve looks at things. But I suspect that's more of a 2022 or 2023 issue, so perhaps not so relevant for today's discussion. Regulatory policy, though, is a big one. The Trump administration, through executive order and some legislation, has rolled back a number of regulations, for example, in the energy sector and the environmental sector, that a Biden administration, particularly if supported by Congress, is likely to enact, and not just enact through executive orders, which can be overturned by a future president rather easily, but actually through regulation. In a related way, a Biden administration is almost certain to rejoin the Paris Accord and begin to pass policies that would have an emphasis on trying to reduce carbon emissions out over the next couple of decades. So if we think about regulatory policy and its impact, certainly the energy sector, the carbon emitting sectors of the economy are going to be treated differently in a clean sweep by Democrats than they have over the last 4 years by a Republican president. What we could probably also see in regulatory policy is a changed perception of the entire healthcare industry. While Biden believes in private insurance supplemented by the so-called public option of Medicare, giving people the right or the ability to sign up for Medicare is likely to create a long-term shift towards the public provision of healthcare insurance and healthcare, let's say, services to more and more Americans, which will put a lot of pressure on some areas of the healthcare sector, including pharmaceuticals and the private hospitals and the like. So the healthcare sector is going to face a different environment going forward if we have a clean sweep by the Democrats. One of the things I omitted, by the way, in fiscal policy, but we can include it perhaps in this discussion as well. This is that the Biden administration will almost surely also raise corporate income tax rates, not back to where they were before the Trump administration lowered them, not back to 35%, for example, but somewhere in between from the current rate of 21 up to around 28%. Trade policy is a big one. This matters for emerging markets, including South Africa. Although Democrats are often labeled as anti-trade because they are seen as pro-union, almost every major piece of trade legislation enacted in the United States since World War II was either initiated or signed by a Democratic administration. I won't go through that list. You can take it as writ, but it has been the case. And certainly the Trump administration, through a populist approach to trade, has created more frictions, put up trade barriers, including tariffs. Those won't necessarily come down on day one, but I think we can see we can expect a more normalized, more historically consistent trade policy from a Biden administration than we have seen in the last 4 years. Tensions will be reduced, tariffs will probably be lowered. A better trading and discussion forum will be reestablished between some of America's key trading partners, Western Europe, for example, or Mexico, than has been the case over the last 4 years. China may still remain a point of contention, but even there, I suspect, will be in a more predictable and in a sort of a cool off period around trade policy. I think that's an unambiguous positive for the world economy. It is unambiguously positive, I think, for emerging markets, perhaps more those of East Asia and Latin America than South Africa, but nevertheless, I think it could be viewed very positively also in your country. And ditto for foreign policy. I think we'll see more predictability, more continuity with the broad course of US foreign policy over the course of the post-war period. I won't go into it now, but there are some undercurrents that are taking the US away from some of the policies that became so customary after 1945. But at least those transitions are likely to be more gradual, more predictable, more well telegraphed than has been the case over the last 4 years. Lastly, what's in it for South Africa? Well, in all honesty, I suppose South Africa will come down the list of priorities for any administration in Washington, D.C. But I do think that South Africa can find itself in a better dialogue going forward in a Biden administration, simply because of the things that I've already mentioned about a policy that's going to be more open to favorable trade relations and towards policies that are more predictable in general. America's interests in South Africa and in Africa more generally, of course, have traditionally been secondary to its interests elsewhere in the world. But as we move more and more towards a bipolar world with the United States and China being seen as the major powers economically and perhaps even militarily, and certainly in terms of geopolitics, Africa becomes one of those areas that has already become of interest to those two powers as they warily eye what the other is doing in the continent. And I think South Africa will find itself with very much of a willing ally and friend under most American administrations in the decades to come, but that process would be hastened, it seems to me, if the presidency reverts to Joe Biden in January, and probably helped by a willing Congress that would be willing to look at treaties and other agreements with a country like South Africa. So Adrian, with that, I will conclude. I think it's probably time to move on to the Q&A session. Thank you very much.
Right, thank you, Larry. Appreciate that. I don't think I've ever seen anyone summarize the election process so well, to be honest. Makes sense to me for the first time. And in addition to that, I mean, it's very clear that the election is quite important, but it's surprising is that it's coming with so much controversy and so many contentious things as well. If we look at the polls, for example, I recall from the previous election that the polls sort of leaned towards a certain direction, and markets were quite surprised. People were quite surprised by the outcome of the election. But if we look at the extent to which it seems that Biden is being favored here, do you think there's any surprises in store for us?
Well, I think your question is well put in the sense that we have to be cognizant of the risk of surprises, if I could put it that way, the risk to market participants and perhaps in other dimensions as well. 2016, as you quite rightly pointed out, was a surprise in terms of Trump winning that election. I think it was actually a surprise to him, and even he has admitted that at various times. And it comes on the heels of some other major surprises that we've seen in elections. I think I mentioned in my remarks Brexit as an example of that. Public opinion polling has, in that sense, been, let's say, under scrutiny, and certainly there are lots of doubts about it. If there is a surprise in this election, it seems to me that it will probably be around the contested variant. Now, I know that's not for some people a surprise since it has been in the discussion, but it seems that if we think about the odds would suggest that you're going to see President Biden in January with, as I said before, a supportive Congress. If we allow ourselves to think about the alternative, then the most likely one is where the election is essentially too close to call. And in that environment, while the Electoral College might present us with a winner, the other side might well contest it. And that would be the thing that I think we should probably focus most upon, because as we know, markets really dislike uncertainty. And in this kind of an environment where you have such a polarized political environment in the US, a contested election may not be easily settled through the mechanisms that are in place in the United States Constitution, i.e. through the courts, eventually the Supreme Court, or as I cited, at least in one historical case, where it goes to the Congress and the Senate, simply because of the divisions that might make it unacceptable for the side that loses in the end to accept the result, unlike the way Al Gore accepted the result in 2000. So I think it's not just uncertainty that would be sort of present during a period of time when that process would be at work, but doubts about whether the final outcome then would be accepted by the side that actually loses the election. So to me, that is a significant risk in many respects. As an economist, I would take that seriously as a risk as a market participant as well.
Okay. The other thing from the previous election that also has me thinking is the only thing that was the bigger surprise than the Trump victory was that the markets reacted so positively to that news. So how do you see, I mean, you already mentioned that uncertainty doesn't really, we know that markets don't like that. So if there's any controversy around the result, how long could those delays be? And what do we expect the market reaction to be for victory on either side?
Right. So you are right. I think when the results, if from my memory serves me correctly, started to come in that indicated that Trump would win in 2016, there was an initial in futures markets overnight and so forth, an initial setback that was very quickly reversed within hours. And from there, the market soared. That is, global equity markets soared, led particularly by U.S. markets. I think the difference then to today is that fairly soon, it took a little bit longer than usual, Hillary Clinton conceded. So the idea that it might be contested was removed. And markets then began to focus on what they believe then, and to some extent correctly, would be the favorable impacts for investors, particularly for equity investors, namely the prospect of a lighter touch regulatory environment and the prospect of cuts in corporate income taxes, to name two important things. And so you really began to see the response of the market in terms of the higher expected future profitability taking place literally as the results became known in the ensuing days, and of course from that point forward. In contrast, if we have a contested election, you wouldn't really be able to make up your minds about some of those impacts so quickly, hence the uncertainty. And as I said before, the uncertainty about whether the election results would then be accepted, leading to potentially some kind of political strife or at least, a very, very difficult political environment would be different, it seems to me, in a 2020 contested election. To the second part of your question, how might markets respond depending on whether we have a Trump re-election or a Biden election, and obviously with some of the constellations up on Capitol Hill also at stake? It seems to me that if we have a Trump election, then it will have some positive impacts on markets. After all, people will have confidence, and I think justifiably so, that corporate income tax rates will not go up as they would under a Biden administration. And you would have a continuity about a, let's say, by and large, business-friendly environment coming out of the White House, at least as far as domestic regulation is concerned. You will, of course, have concerns that trade wars could reemerge, that has certain impacts on some industries, have long supply chains, or otherwise more engaged in global commerce than others. So there can be clear differentiation there. But I could definitely see why there might be positive stories there. In a Biden election, again, I think people will look at that mostly through a positive prism because of declining political risk premiums. And they would also look at it in a very segmented way. They could look at certain sectors that would probably do better. In other words, things like cyclicals and value would probably enjoy a good run because of the idea that we could actually have strong fiscal support for the economy through 2021 that you might not get in a divided outcome case, because the House of Representatives is almost certainly going to stay in Democratic hands. That would be pretty hard to see that flipping. So, but on the other hand, you're going to have some segments, I think I mentioned them earlier, energy and healthcare, where there are going to be more question marks raised by a Biden administration because of its approach to policies that will potentially have adverse impacts on their profitability.
You sort of touched now on the fiscal side of things and the corporate taxes. What does surprise me, though, is that is taken on as an approach during a campaign, because my logic would be, wouldn't that then also impact wages, a company's ability to pay better wages? So if there's higher taxes, or how does that logic stitch together from a campaigning perspective, do you think?
Yeah, I think you're right. I mean, traditionally, Republicans have labeled Democrats, and with justification, as being tax and spend, that they're always looking to tax Americans, whether at the corporate or individual level, more for their favorite programs. And there's been some efforts to paint Biden and the Democrats that way. In the current environment, though, it's probably a little less effective because of the wide disparity in income that people see. Trump has really signaled his support for Wall Street, and that Wall Street is a good measure of his performance, which of course for a few Americans is correct, those that generally speaking have investable assets. But as we know, about 90% of all portfolio assets in the United States, stocks, bonds, and the like, are held by about 10% of Americans. So the vast majority of Americans don't perceive it that way, and they tend to perhaps be more open to the idea that we should, out of, let's say, equity reasons, that is, equality reasons, tax companies at higher rates in order to provide for benefits that they do enjoy from government, be the unemployment benefits today in the recession, or perhaps other forms of benefits that may or may not be, by the way, be directly linked to corporate income tax revenues, like Social Security as an example of that, or healthcare. But I think in this world of let's say the gap between the haves and the have-nots, and all the perceptions that have driven populist messages, the idea that you can paint Democrats as taxers is probably less effective than it has been in the past. And given that Biden has tried to keep that message to, we're just taxing companies and maybe very high net worth individuals, doesn't seem to have cost him much support where it might have in the past.
Yeah, that's quite interesting, because obviously now also with the whole COVID situation that we have, unemployment numbers are through the roof, and simultaneously people do need more support from government. So it's actually, if you think about it, does maybe make quite a bit of sense from a campaigning perspective. If we look at the monetary policy situation, you mentioned that maybe that's less impacted by the US elections, but also what we have seen globally now is balance sheets have completely just exploded, and sovereigns are indebted to a big extent. So whoever does sit the next term will be faced with a big problem in trying to rewind some of those big debts. So how do you see monetary policy in that light? I mean, we've already seen Chairman Powell mentioned that interest rates will remain low right up to 2023, but and that high levels of debt shouldn't be a problem as long as the inflation rates are under control. But it does seem like it could be quite a risky approach.
I very much agree with that. In the current environment, which you quite well characterized in terms of levels of joblessness and the concern perhaps more about where risks reside, that is in a new setback, particularly if the pandemic reemerges as we saw it back in the earlier months of this year in the spring, then there is downside risk. And as a result, Chairman Powell and others at the Federal Reserve have emphasized not only their own commitment, as you quite rightly said, to very low interest rates and a very large balance sheet out over the next few years, but in recent comments, they've also emphasized the need for further fiscal support, right? They've highlighted the risk that if there isn't an agreement, even this year, but certainly carrying out into 2021, then they would also be much more concerned about the future path for growth, inflation, and the other things that they're obviously keeping their eye on. So for the time being, the Fed is very much in the expansionary fiscal policy cheerleading mode. It can only really be a cheerleader in a sense because it isn't obviously something that it controls. But in a not so subtle way, they're also saying, maybe not as categorically as I'm about to put it, but we'll finance those deficits. We will buy enough treasuries to allow the government to fund itself at super low interest rates like those that are on offer today. That I think is really likely to be the narrative still over at least the next half year and maybe the next year. That's why I thought monetary policy is probably a little bit more tomorrow's problem than and sort of interesting outcome for markets. But you're quite right that somewhere out there, no one really knows where it is. Could be as early as 2022. It might be much later than that. Central banks who have achieved their aims, that is, of restoring inflation to the levels that they deem appropriate in the context one imagines of a more fully employed economy, will have to begin to unwind this. And by the way, so too will governments have to begin to reduce deficits and even over time try to address this big overhang of debt that's been created. The US debt to GDP is now over 100%. We used to only think of countries like Italy or maybe Belgium being in that kind of a category in the US, or Japan as well, now being in that cohort, as are many other countries, leaves us with a very long-term challenge of trying to achieve fiscal stability or financial stability over the long run. So there's going to be a very interesting story that plays out sometime later this decade. Again, it's really hard to know when, where governments are likely through fiscal policy to be tightening as they try to get the levels of deficits down and try to stabilize debt relative to income, relative to GDP. At the same time that central banks will be looking at inflation targets having been met, economies at full employment and wanting to unwind what they're doing. And there will be some risk that both of them will actually be putting too much restraint on economies. But that is tomorrow's problem. It's very unlikely, I think, to be at the forefront of investors' minds in the immediate future that lies ahead of us.
Okay. If we look at the regulation side of things, something that truly stands out is if you take the S&P and the high levels of concentration, and you look at some of the regulatory risk in the tech sector around anti-competitive behavior, those kind of things, there's quite a lot of good news priced into the valuations of those firms, and yet US election comes with changes in terms of policy. Do you foresee any uphill for those firms in terms of changes to the regulations?
I think there is risk. We certainly have to be aware of that risk. It stems from obviously a few sort of sources. The first, again, is this backdrop where the vast majority of citizens, I think this is true not just in the US, but in many countries, feel as though the last few decades have left them behind, that they have not participated in rising levels of measured prosperity, rising GDP, for example. And so there is a backlash against those that have done particularly well. And some of that is against the tech sector, although historically it's probably been more aimed at other directions, including towards areas of finance. That's one thing. Secondly, the Democratic Party is we're now will assume that perhaps we have a Democratic control in the House and the Senate, because that's really the only way that you could imagine a shift towards an antitrust type of approach to those big tech companies with a President Biden. Democratic Party is a big tent, right? There are people who are very far left, and there are people who are more moderate and centrist, and there are even some of those that would probably find themselves more in the center-right part of the political spectrum. But it is the more populist left that has really begun to emerge in the Democratic Party. You know, Alexandria Ocasio-Cortez, even Elizabeth Warren, Bernie Sanders, of course, all belong, broadly speaking, into that left-leaning side of the Democratic Party, very populist side. And many of them have chosen to target big tech. We can think about AOC's, for example, opposition to Amazon moving its second headquarters into Queens, the borough of New York City, for fear that it would displace local residents. Probably not totally unfounded either, right? So there is that element there. It has to be, I think, in political terms, though, juxtaposed against the following, namely that, with some exceptions, for the most part, Silicon Valley, if we want to think of it as that, sort of using that sort of phrase, has actually been a fairly big supporter of the Democratic Party, at least of the centrist parts of the Democratic Party, which in American terms means money, right? It takes several $1 billion now to run an effective presidential campaign, and even more than that across all the dimensions of getting people elected every cycle. And a lot of that money flows not even just directly to candidates, but through these so-called political action campaigns, PACs and super PACs, from very, very wealthy donors. And for the Democratic Party, areas like Silicon Valley, Hollywood, and Wall Street have traditionally been big areas of support. So the left wing of the Democratic Party may want to move in that direction, but I think there's going to be a lot of resistance within the Democratic Party about basically biting the hand that feeds it. And so from that perspective, I think the risk is there, worth watching, but I don't think it's going to be probably the base case. Finally, in that regard, US antitrust law, historically, Sherman antitrust, other measures that were passed in the latter half of the 19th century, early part of the 20th century, generally, in a legal sense, have to show that there is a pricing behavior by either a monopolist or an oligopoly, a group of firms that injures consumers. And you might find that a little bit in one or two of these companies, but if you take one example, Amazon, it's really hard to show that because Amazon is actually undercutting everybody on prices. And if you look at Amazon's share, not in terms of online retail, but in terms of retail, it's still pretty modest, right? It's certainly less than 1 in every 10 goods sold in the US. It's probably closer to 1 in every 20 that might be sold, but first online, but by Amazon itself. So it's actually a pretty hard antitrust case to make. You can always develop new legislation, but historically, I think it would actually be tough. Cloud computing might be different, but in retail, which is really where the populism would be aiming its fire, it's a tough argument to make.
Yeah, and I think also when we talk about these firms, we've also seen the effect of tax rates on some of them being reported as extremely low. I think, would it be accurate to say that regardless of who wins the next term, there will be more focus on that?
I think there will be. And one of the things that sort of is loosely making its rounds these days is something that exists in personal income tax reporting, which is an alternative minimum tax. So if after all the deductions and the write-offs and so forth, given a certain level of gross income, you haven't reported a certain amount of taxable income and therefore tax on it, an alternative minimum income tax kicks in. That's part of US law for individuals. And one can imagine that there might be some such scheme so that those companies that have paid very little, perhaps even no tax, because they're sheltering income offshore or because of various ways in which they're writing off certain kinds of expenses, might have to pay an alternative minimum is possible. It's very complex and arcane in the tax law, but something that moves the dial in that direction may be in the offing as well. So it may not be as simple as just simply saying, well, we're going to raise the corporate income tax for all companies back up to the high 20s in terms of percentage points. There may be some other mechanisms to try to capture more companies within the net of income tax. In the scheme of things, that's all politics. It makes almost no difference to the fiscal arithmetic of the country. The vast majority of taxes that are collected by the US government are collected from individuals through individual income taxes, not corporate income taxes. And the vast majority of those are paid by the top quintile of Americans. So this is all about appearances, not necessarily about changing, let's say, fiscal arithmetic realities.
Then in terms of trade policy, so I don't think, it's going to take quite a bit of energy from investors to stomach another full year of volatile markets and controversial commentary. And I think, you could be hopeful that some of that dies down. But if anything, considering that Trump surely still had a second term at the back of his mind, he was still probably holding back. What are we looking forward to in the second term?
So first, I think in terms of volatility, there has been, if one looks at the nature of markets, a lot of people hedging against the risk of volatility right around the election, right in the few weeks after it. If the polls are right, those sort of hedges will maybe, thankfully, probably not be so effective, but there could be still further what we call in US politics October surprises, where you have, something like 25 days or so at the time, at least of this recording, to the election itself. And Trump trailing in the polls, may engineer the odd surprise that could produce volatility in markets. So even in the weeks running up here to the November 3rd polls, we should probably prepare ourselves, gird ourselves perhaps for a little bit of volatility, because that would seem to be something to at least not rule out. If there is a second Trump election around volatility, I mean, let's leave aside again any volatility, uncertainty around a contested election and how it's accepted, but just in a genuine sense of the politics, it would seem to me that those would still be concentrated in areas of international relations, right? Whether in trade relations and frictions that probably would find recurrence, especially vis-a-vis emerging markets, especially vis-a-vis China. I think that's something we have to expect. Donald Trump has obviously been very inconsistent, if I can put it that way, in his views on a number of issues as president and even before he's been president. But one thing that if you look at his track record that he's been absolutely consistent on is that he is not a promoter of free trade in the traditional sense. He looks at trade not as positive sum, the way economists like me do. He looks at it as zero sum. I win, you lose. And in that kind of a world, given his consistency on it, we would have to imagine that as long as there is a US trade deficit, and it is now, again, at historic proportions, at least in dollar terms, you're going to see a president who feels that it is his job to reverse that. And that means in his sort of way of doing things, using blunt instruments like tariffs and non-tariff barriers and other threats to achieve his aims, which generally speaking is not going to be welcome for investors in terms of volatility. But again, on the positive side of a Trump administration, as far as people investing in companies and securities and stocks and bonds and so forth, is the probability that this president in a second term would even dial down further some of the regulations that companies have to live under. And generally speaking, that's for business welcome in terms of a freer hand to play that hand, an ability to earn more for shareholders and for senior management. And from that perspective, markets will embed that in their pricing as well. So that would be a positive, it seems to me, for at least for global equity and for global credit markets.
Okay. Yeah, I think the real concern is that markets are saying, well, this could easily escalate into military action. And I think that's where the real fear comes in. And you see reports of naval ships in the South China Seas, and you wonder whether it's purely intimidation or whether something could really come off of that. So I think what I'm hearing from you is that more likely than anything else, it's probably just a show of power, and unlikely to materialize in anything military.
I think that's right. I mean, history teaches us that the rhetoric matters, that bluffs, if we want to call them, bravado and so forth, can easily spill over into actual conflict, and then we spiral towards something that is really, really unwelcome and hopefully to be avoided. So I don't think we can rule those things out. The modern, what I guess I would call the modern Republican Party, that is the party of Donald Trump, but to some extent it was headed there even before his arrival, is also, however, a bit of a throwback to elements of that same party that we saw in the 1950s and we saw in the interwar period, that is between World War I and World War II. Namely, it is a party of isolation. It's a nationalist, populist type of approach, but it's one that basically is inward looking and not outward looking. And you see strong elements of that. And I think it speaks to your question in, for example, Trump's Middle East policy. He's withdrawn troops. He's tried to de-escalate military involvement in the United States in Syria, in Iraq, in Afghanistan. Maybe with success, maybe without. I'd leave it for others to judge that. But in that sense, this is not necessarily going to bring the US into conflict the way other presidents who felt it was their duty, whether out of geopolitical reasons or moral reasons or others, to intervene in hotspots around the world that often could result actually in more military engagement and indeed at times in greater risk. So isolationism may be good or may be bad. I'm not trying to sort of, interject any personal views on that. But one of the things about the Trump administration is that there is bravado there is bluster, but there's also, I think, a kind of a relatively deep-seated feeling that the US should not be involving itself in the affairs of others. That tends to mitigate maybe some of that risk that we would end up in open conflict with China or some other power.
Okay. I think we need to leave it there for today. I see in terms of important next dates, there's a second debate scheduled for Thursday. Let's see if it's going to take place. I had a bit of a chuckle when I saw it was scheduled at the Center for Performing Arts. I wonder if they knew what was coming. And then we'll see you again on the 10th of November to discuss the results. Thank you very much for your time.
Lovely. Thank you very much, Adrian. Really enjoyed it. It's a pleasure.
Thank you.